Hello, welcome to Triathlon Partners TV. This is Ira Coiner. Well, I'm very excited to be here today. We got our new studio, we got our new backdrop here, we got a microphone, swag we're wearing, yeah. So we're very proud of it, very proud of our success, and we're very thankful for our subscribers, all our social media support. It's really great. You really help us out. Now, today's topic that we're going to discuss is long-term care insurance. It's a very difficult product landscape to navigate on your own. And we know it's something people have a lot of questions about because they see firsthand the type of care that their parents are receiving, the type of care their parents want, the type of care that they're going to want if they need long-term care. Now, so what is long-term care insurance? Long-term care insurance is you get paid a benefit if you qualify, right? And when you qualify to need long-term care insurance, you need help with 2 out of 6 activities of daily living. So these 6 activities of daily living are dressing, bathing, transferring, meaning getting up and down out of bed or a chair, feeding, toileting, which means help going in the bathroom, and incontinence. Okay. Now, these really do span abilities of different types. Some are more severe than others, as well as another event that would qualify you for long-term care insurance benefits is dementia, Alzheimer's, if you're a danger to yourself, a flight risk, if you will, that someone needs to watch you at for the majority of time. Right. So all you need is a note or letter from your doctor or medical professional with a plan of care, like an action plan of care, what type of care you need, what you need help with. And as long as it complies with those 2 out of 6 parts of daily living, activities of daily living, it's not an issue. You will get your benefit. Now, it's really important to determine what type of benefit you want, right? So when I'm talking about what type of benefit you want, it's really where you want to receive your care. Do you want it only at a facility? Do you want it at home, senior centers, assisted living? Those are all different options. And it's not that the policies won't necessarily cover one versus another. They just reimburse you at different rates, which they'll reimburse you at 100% if you go to a facility, but they might not reimburse you 100% of what your benefit's supposed to be if you take home care, right? This is a big deal because when people are asked the type of care they want it in the home. Right? And when we look at how long people who qualify for long-term care, how long they actually require services is about 2.5 years on average, right? And that's about 2 years for men, 3 years for women, because women live longer than men. And the longer you live, the more likely you are to need long-term care insurance or long-term care benefits, right? As well as people that are single, if you will, not married, not in a relationship, they tend to need more long-term care than a married couple or couple that lives together. Just something to keep in mind out there. And that is a question they ask when you apply for the insurance. It does change the cost of it. So really, we talked about number one, where do you want your type of care? And number two is, how do you want that care to be received, right? So do you want a plan that you have to submit expenses and receipts and they reimburse you? Or do you want what would be called a cash indemnity benefit, meaning you qualify for the long-term care, the insurance company has that plan of action, and they just cut you a check every month that's predetermined on your benefit, and you can spend it how you like. If you get home care, if you're in assisted living, if you're in a nursing home, it's really all the it covers everything, and they're not really too particular where you get your care. You've paid for the insurance, and they're paying you your benefit. right? So those are the things to consider because they're going to affect the cost, as well as you want to make sure the type of care you're paying for or the benefit you're paying for is something that you're going to want, right? And feel that it's aligned with your goals. Now, how to keep your premiums affordable, because this is very expensive. It could be very expensive depending upon what you buy. And a lot of times people aren't, they're not listened to on what their thoughts are, and they think there's only one type of insurance out there. Now, a way to keep insurance affordable is to think, when am I going to need long-term care insurance? Now, again, I said, the longer you live, the more likely you are to need long-term care insurance. So, as well as the longer, when you take long-term care insurance, if you need it in 5 years' time versus in 20 years' time, meaning that's when you qualify for it, we know in 20 years' time it's going to be more expensive in terms of the cost of being cared for, right? So what these policies have, and we find very important, and almost the most important part of a policy, is the inflation rider, meaning today you get X amount of benefit a month, is the way it's typically priced. And I want that benefit to increase X amount every year, right? And that X amount every year would be the inflation rider. You don't have to have an inflation rider. And there are different levels of inflation rider. You can have typically 3 or 5% is where it is. And so that way you buy the least amount of insurance now with the highest inflation rider, so that when you get to an age in your 70s or 80s, you have a significant amount of benefit to go against like what the cost of care is going to be, right? So that's very, very, very important to keep in mind, because that keeps your premiums quite low, right? Because getting that high benefit now until you're age 80, it's really most likely not going to be needed beforehand, right? So again, these benefits also go for a certain number of years, right? So you get to actually pick the number of years. No one can accurately predict, but because with the averages between 2.5 and men are 2 years, women are 3, you could try to balance your exposure out that way, and that really keeps things costs down, as opposed to buying an indefinite care, which might only pay in a facility, or even if it doesn't pay in a facility, pays anywhere. Getting long-term care for 7 or 10 years could be benefits for that long could be very, very expensive. Right. As well as we have to consider long-term care. If you paid all this premium, and a lot of people aren't going to ever claim a benefit, they pay this premium, they've never used it. And when obviously you're not going to need long-term care after you die, all this money is gone. There are hybrid policies out there that do reimburse you for the premiums you pay as a death benefit, which makes some people feel a lot more comfortable that the money's not just all gone. Right? So those are things to keep in mind. And then there's another aspect of it, and people don't realize it. It's how do you pay for long-term care insurance? There's several ways. Obviously, most intuitive way is you write a check, right? Yeah. But that's not what I'm talking about. What I'm talking about is there are tax deductions. A lot of times with business owners, they can have top-line deductions. Depending upon what age you are, there is a deduction for the amount of long-term care insurance you can buy and get a write-off on. The older you are, the bigger the deduction. If you have an HSA account, people don't realize this, you can take HSA money and pay the premiums for long-term care. HSA money comes out of your paycheck tax-free, or pre-tax, excuse me. And then if you had it for a while and you invest it, that money grows tax-free. And when you actually withdraw the money, it's withdrawn tax-free. So it's really a fantastic investment vehicle. You need to spend it on qualifying medical expenses, but long-term care insurance premiums do qualify. So that's fantastic because if you don't have to pay taxes on your money and you're in a 30 or 40% tax bracket, you're actually getting quite a big discount on it. As well as if you have permanent insurance, permanent life insurance like Universal Life or Whole Life, you can always buy the long-term care insurance by transferring value out of those policies. And when you transfer value out of those policies, they move over without a taxable event. So basically, you're getting it paid for. You can also look at long-term care riders on existing policies or on future policies if you're looking to change up what type of whole life insurance or permanent insurance you have. So hopefully this conversation has given a lot of great ideas for you who are considering long-term care insurance, who might think the long-term care insurance is too expensive because you might not be aware that the different types of policies out there, the different options of the benefits that you can get that really drives the cost, as well as the different ways to pay for it. And some of these things you can actually plan in advance and to match up future premiums with the different deductibilities or tax-free income you can pay with it. So please, I'm sure there's a lot of thoughts out there, a lot of questions. So please contact us at triathlonpartners.com. We're going to move over here. Our phone number is great. You give us a call. We'll get back to you as soon as we can. And everyone, have a very blessed day. Thank you very much for your support. And right now, I'm just going to share with you the disclaimers. Right. So here we go.